Forex is a global marketplace where currencies are bought, sold, and traded 24/7 around the clock. This was the exact definition I got from a friend some years back when I first heard about Forex trading. The definition wasn't the problem, but I couldn't comprehend what he was trying to say, so I ditched the idea of becoming a Forex trader. Perhaps he wasn't a trader himself. Fast forward to 2020, during the lockdown, if you can relate, there were so many Forex related adverts. Traders were making money driving exotic cars and all that. So I couldn't resist the numbers on my screen. So I began to research what this trading stuff was all about. And here was what I discovered. You see, whenever there is a global event like pandemic, war, election, you see things like that, traders make a lot of money because the currency of that particular region becomes a lot more volatile, and traders make money from volatile markets. So it all made sense why there were so many ads related to forex trading during that time. So this got my interest because most companies were shutting down at that moment. Traders were still making money. Hey traders, welcome to today's video. This particular video I'll be taking you from the basic of forex trading to the brilliance of forex trading. So what exactly is Forex? Forex is an abbreviation for foreign exchange. It's like a global marketplace where currencies are traded. Imagine you're planning a trip to another country. You need to exchange your money for the currency of that country in order to buy things there. For example, let's say you're from the United States and you're traveling to Europe. You have US dollar, but in Europe they use euros. So you go to an exchange booth and swap your dollar for euros. The exchange rate tells you how many euros you will get for each dollar. Now think of forex trading as a similar concept, but rather than buying currency for a trip, people buy and sell currencies in order to make profits. They do this by speculating on whether one currency will strengthen or weaken against another. For instance, let's say you believe the US dollar will strengthen against the euro. You might buy US dollar with euro at one exchange rate and then sell them later when the exchange rate has risen, making a profit on the difference. Let's break it down further. Imagine you're watching the news and you see reports suggesting that US economy is doing really well compared to the economy of Europe. This makes you think that the US dollar will become stronger, meaning it will be worth more compared to the euro. So you decide to take action. You go to a currency exchange and use your euros to buy US dollar at the current exchange rate. Let's say you trade 100 euros and got 120 US dollar in your return. Now you wait for some time as expected. The US economy continues to do better, and the more people want to buy US dollar, this increases the value of US dollar compared to the euro. When you think the time is right, you go back to the currency exchange and sell your US dollar to get euros again. Since the US dollar is now worth more, you get more euros back than what you initially traded. Let's say you get 110 euros for your 120 US dollar. By doing this, you've made a profit because you started with 100 euros and ended up with 110 euros. You have effectively gained 10 euros by correctly predicting that the US dollar will strengthen against the euro. At this point, you might probably have a couple of questions on your mind. I'm going to answer the two most obvious ones. Do I need money to trade Forex? Of course, I'm a Forex trader, and in this industry, you actually need money in order to make money. But hold on, it's not actually what you think. You really don't need to do the heavy lifting. The most important thing you need right now is a skill. But I'm going to elaborate more on this particular point. So how much do I need to trade Forex? There is no cap to this. But using our previous exercise, we're able to make $10 out of our $100 initial deposit. That was 10%. If you had put this money into a bank and the bank used your money for a business, at the end of the day, you might not even get up to 10%, but you actually made this money from waiting for a couple of days. If you had invested $1,000, you would have come out with a profit of $100. If you had invested $10,000, you would have come out with a profit of $1,000. If you had invested $100,000, you would have come out with a profit of $10,000. That is more than some people's annual salary that you actually made in a couple of days. And in fact, you can actually make that in a day in forex trading. Bottom line is you need money in order to trade forex. So where do you get money to trade forex? You see, all the traders you admire right now started from somewhere. In fact, let me break this to you. Some found it very difficult to even fund their account with $10 when they started. But this is the power of forex trading. Forex can change your life in a couple of years. But before we get into that, If you've watched this video to this particular point, I assume you're actually gaining value from this video. So just smash the like button so the algorithm can push this video to other people who might be interested in forex trading. You see, when it comes to forex trading, the most important thing you need is the skill. Once you have the skill, there are endless of opportunity in this industry. We have investors that will be looking for you. We have proprietary firms that can lend you money to trade. So gone are the days when you actually need to sort out for your rich uncles, rich aunties who are financially okay, who can help you with money to compound and provide you get something you can start working with over time. So the new trend, once you get good at this forex trading stuff, you might actually buy a challenge and you split the money. Some companies offer 90% to the trader and they take 10% of the capital. Or probably you might sort out for an investor. When the investor invests money, you guys sign the contract. When you make profit, a part of that money belongs to you and a part belongs to the investor. Does that mean you can actually make money as an individual without seeking for a third party? No, you can actually make money by using this tool called leverage.
With leverage, you're essentially borrowing funds from your broker to increase your trading position beyond what your account balance would typically allow. Example of leverage offered by forex brokers include 1:50, 1:100, 1:200, 1:500, 1:1000. Some brokers go as far as offering traders with 1:2000. Now going back to your example, let's say you add $100 in your trading account and used 1:1000 leverage. Instead of trading 100 euros for 120 US dollar, you could potentially control a trade worth $100,000 with just $100 in your account. This magnifies your potential profits and losses significantly compared to trading without leverage.
So let's inject a little bit of humor into our forex journey, shall we? Who knew that trading the financial markets could be unpredictable as deciding what to have for lunch? Forex trading involves risk. Exchange rates can be influenced by various factors like economic indicators, political events, and market sentiment, making it unpredictable at times. Successful traders employ risk management strategies such as setting stop-loss orders and practicing disciplined trading to mitigate potential losses and maximize profits. In summary, forex trading is like exchanging money for a tree, but instead of traveling, you're trying to make money by trading currency based on their value fluctuation. And that's a wrap on today's video. We've covered the basics, shared some laugh, and hopefully inspired you to embark on your own forex adventure. Don't forget to hit the subscribe button for more valuable content. And feel free to leave your question and feedback in the comment section. And until next time, happy trading.